Hi, I'm Max Keiser. Welcome to the Keiser Report. German people, I told you to hang on to your gold. Yes, it all started back in March 17 of 2008. Bear Stearns had collapsed that weekend. Ben Bernanke had slashed rates by 75 basis points on Sunday night. And on Monday morning, I had arrived at the Bundesbank to speak to their head of the gold department about Gordon Brown's bottom. Stacy, tell us the rest of this story.
Brown's bottom is not the physical bottom, but the bottom in the gold price. It's like a several hundred-year bottom in the price, and that's when Gordon Brown decided to sell off half his gold supply. So we went to Germany to ask the Bundesbank why they kept their gold in order to highlight why Britain would get rid of their gold. Little did we know that that weekend the financial crisis would really start in earnest. It went down so hard. And what you found was that they were panicked that the financial markets themselves would not survive. They said this to you, we had it on tape. And the other thing you said was, well, surely you're glad that you have so much gold. Can I see it? And they said, no, it's all in New York.
And since that time, there's been a growing movement in Germany to try to figure out where the gold is. Germans are concerned now that the global financial crisis is entering into its end game of sovereign bond blow-off, and the only thing left will be gold. People in Germany want to know, well, is 60% of their gold actually held out of Germany? Are we really that exposed to this downturn?
Sure, and it also shows how long these financial and currency wars go on. I mean, everybody always looks for an immediate win, like that decisive outcome right then. But this is like 4 years ago that we were there. And GATA, the Gold Antitrust Action Committee, has really been pursuing this doggedly. But I want to also flash back to a little video we made at that time to just show you how little understanding there was in Germany of actually where their gold supplies were.
Germany, German people, I say. Alan Greenspan and Ben Bernanke want you to swap your valuable gold for U.S. Treasury bonds and U.S. dollars that are entirely worthless. Don't do it, German people. Hold on to your gold. Gold has value. The U.S. dollar has no value. It's the devil's currency. Hold on to your gold, German people.
So as you saw from that video, there was nobody there in the audience. That's in the middle and the heart of Frankfurt. And today, however, look at the headline, Max. German court demands Bundesbank audit sovereign gold holdings. So the German Court of Auditors, the Bundesrechnungshof, has demanded that the Bundesbank undertake an audit of its gold reserves. In an audit, the Fed-style effort, the court wants to ensure that the nearly 3,400 tons of gold is in fact in existence because stocks have never been checked for authenticity or weight. That's according to the Bundesbank. What they told the court is they've never felt it necessary to actually audit the gold, even check that it's there, because they trust the Bank of England, the U.S. Federal Reserve Bank in New York, and the Bank of France, where all their gold is.
Right, well, the Bank of England and the New York Fed have been lending that gold out to support the rehypothecation schemes that created the multi-hundred trillion dollar bubble. So I think Germany will be shocked to find out that their gold doesn't exist anymore. They're going to have to buy it in the open market, and as they do so, they'll spike the prices to even higher prices. The central banks have been buying gold now for several years when we started telling them to buy central banks. To buy gold, and as a result, they're causing their own demise, because as they realize they don't have enough gold to survive, they have to buy it in the open market. They're going to force the price back up to that $10,000 an ounce level that is our target.
And now, back then in 2008, when you were there in the center of Frankfurt, telling the people that they should hang on to their gold, of course, everybody assumed that they had gold. They thought they had the shorts on out in the ocean and the tide has gone out, which is the financial crisis. And the Germans found out that they actually don't have all that gold that they felt so secure holding.
Well, just like the German banks got hoodwinked by Wall Street by selling them junk bonds that Moody's and S&P had given AAA ratings to. That was a scam. That was a scheme to defraud German banks. The German people, however, have a tremendous sense of guilt. So they didn't focus on this. They didn't want to rekindle the whole 60 years worth of German bashing. So they allowed themselves to be sold toxic sludge from Wall Street. Wall Street, of course, played on this. They gave junk bonds AAA rating. They ended up in the Bundesbank and Frankfurt and German banks and European banks. Now, to add insult to injury, Wall Street is saying, you know, you don't have your gold either. So, Germany, I know you've been quiet for a number of decades, but maybe it's time to think self-preservation.
Well, I think they're putting their toe in the water of self-preservation, because this story then goes on to say the decision means negotiating with 3 foreign central banks for physical verification. But in anticipation, the Bundesbank has begun the process of shipping 50 tons per year from the Fed back to Germany for the next 3 years.
Well, that means nothing. I mean, they're going to buy gold in the open market. As long as they don't have to disclose hundreds of tons, thousands of tons, they'll happily buy it in the open market and ship it off and say, oh, here it is. There's no audit trail. There's no standard for accounting. There's no bar number, gold bar. There's nothing. It's just a hodgepodge of non-accountability. It's similar to what we've seen in the banking system for the past few years. There's no accountability. There's no chain of ownership. It's just gold that they're going to try to buy in the open market. They'll end up buying it from some poor Indian people. You know, the Indian population has 18,000 tons of gold. It's the biggest gold hoard in the world. The Indians are set to inherit the earth as soon as the U.S. bubble and bonds and UK gilt market implodes. Even Mervyn King today in the paper said that the UK bond market is set to implode, and every central bank in the world is buying gold to hedge themselves against this sovereign bond collapse. Sovereign bonds are trading at a 250-year high. It's a bigger bubble than the Tulip Bull bubble. It's a bigger bubble than the South Sea bubble. Central banks are buying gold. Germany's saying, oh my God, what about our gold? And Wall Street is saying, we sold you junk, rated AAA, and we told you your gold is safe, but it's not. Germany, boy, you're getting screwed, buddy.
Well, you did say that the Germans are filled with guilt. I think when they come to audit their gold supplies here in the UK at the Bank of England, they'll find a safe deposit box filled with gilts.
That's right. They're replacing their guilt with gilts. Here you go. Here's a UK gilt. Oh, by the way, the price is crashing. Oh, well, here's an IOU for worthless paper. Goodbye, Fritz. Have a nice day. Say goodbye to Jeremy Clarkson on your way out. He's a big lover of the Germans, isn't he?
Well, speaking of coming to London to look for their gold, the next headline, Max, more on the German gold reserves controversy. Where is the gold? So this is Jesse's Cafe Americain covering this story. He's covered some of the stuff we've already looked at. But then at the end, he talks about the latest from GATA. GATA has noticed, the Gold Antitrust Action Committee in America, they've noticed that there's been some sales of gold, of German gold, allegedly, from London. And so the fact that they actually haven't made an official announcement about this, they say, means that the lack of announcement of the sale of the German gold in London suggests that the sale was actually part of a gold swap with another central bank, like the New York Fed.
Of course, the UK has been selling German gold to offset all of the losses we see in the UK banking system. The London whale, they lost billions of pounds. Then you had the MF Global, remember? Jamie Dimon at JP Morgan stole $1 billion directly out of customer accounts. How do you make whole on those stolen funds? Well, let's sell some gold. Gold has intrinsic value. There's always a market price for gold. Nobody doesn't accept gold. It's been that way for 5,000 years. Now the Germans are, it's really, I think, going to be a shock that they're going to reinflame the antagonisms from 1930 through 1940, but it's in keeping now with this World War III scenario, which is the currency war.
So with this story about the gold being sold out from London, now remember, the courts have now ordered the Bundesbank to conduct an audit. So GATA says the powerful implication here is that German gold in London was sold at the behest of the United States, and in exchange, Germany took title to United States gold vaulted in the United States. This way, the Bundesbank could continue to claim ownership of the same amount of gold without lying, at least not technically. So again, this is that whole rehypothecation that you talk about. And London, of course, is a place where they're allowed to rehypothecate infinitely. So in fact, German gold held in England, even though it's probably smaller in terms of the quantity compared to the US Federal Reserve Bank of New York, is probably rehypothecated so much times over.
Well, this is why the UK economy is at risk of imploding. That's why we do our show in the UK. We do the show in London because we want a front row seat and watch the city of London collapse. They have the lowest stockpile of gold as a relative to percentage to GDP of any of the G20 nations. Gordon Brown foolishly sold half their gold at a 100-year low. And now that the sovereign banks around the world are buying gold and the sovereign bond market's topping out, getting ready to crash, then the UK is at risk. The British pound is already crashed against gold and silver. How badly will it crash going forward? A lot worse. That's why we're here, to watch the carnage behind me in London, to bring it to you, the viewer, around the world. Germans, if you're upset by how badly the U.S. and London has screwed you, at least watch this show, because we'll try to get some retribution, as David Cameron will call it in his speech, why he should bash a hoodie. Oh, David, you're so bad. Why'd you swing your purse at them? Oh, I'm so frightened from David Cameron. He's seeking retribution. Oh, I'm so scared. Go back to eating, buddy. Get some of that, backstall shower pleasure. Let's be frank about it. I mean, you know the deal there. And that's why they run such an ineffective government, isn't it?
Well, back to Brown's bottom. And
yeah, see what I'm talking about? Here in London, you always see parades of people bicycling with their bottoms flashing out. What's Pippa Middleton, the royal heiress contingent person? What everyone talks about, her bottom. What are these folks from Eton, whether it's Cameron or his little coterie friends? Their bottoms. They're fixated on their bottoms. No wonder the country's going into the toilet, because they can't stop focusing on their bottoms. I'll tell you, a bottom in gold has been reached, and we're heading to $10,000 an ounce on gold. That's the only bottom you need to worry about. Okay, get your finger out of your bottom and focus on your economy, Osborne, you cushy little Eton mess, gorging slime bucket.
Okay, let's finish this last headline here. So when we were there in Germany at the Bundesbank, we did mention a quote from Alan Greenspan regarding Brown's bottom, i.e. he's selling half of Britain's gold supply. He said that it was basically, I'm paraphrasing, that it was a stupid idea because in extremis, as Germany learned during World War II, is that the only currency you can use, always, is gold. So it was dumb to get rid of it. And this is one of the things why we said all individuals should own gold or silver in this currency war time, because IMF's epic plan to conjure away debt and dethrone bankers. So there is a magic wand after all. A revolutionary paper by the International Monetary Fund claims that one can eliminate the net public debt of the U.S. at a stroke and by implication do the same for Britain, Germany, Italy, or Japan. The conjuring trick is to replace our system of private bank-created money, roughly 97% of the money supply, with state-created money. We return to the historical norm before Charles II placed control of the money supply in private hands with the English Free Coinage Act of 1666.
Yeah,